So, hello everybody. Here we go for another one of these Substack videos. Hope everybody's had a good break, a lovely break. Wishing everybody all the best for 2026. Let's get this started. And where to start the year, I think it's good to get where we left off. Basically, the last post from last year was an overview of big tech. I posted all the charts with the key levels we were watching for all the big tech names. And I thought instead of posting the charts again, we could do a short video to just go through them and talk through them in a little bit more detail. Now, before we start, in case you guys have missed it, if you're subscribed to the free Substack here, you'll get this automatically. If not, you could see there's a chat tab you can go into, and what I'm going to start to do this year, and again, let me know if you like it or not, but if you go in there every morning, I'm going to try and post a little bit of a snippet on what I'm looking at on the day, and just to give you a little bit of a heads up what I'd be focusing on. So if that's interesting to you, you can access that in the chat, and please let me know if they're useful, and I'll keep on doing them throughout the year. So here, as we go into this year with market price for perfection, everybody looking for more of the same. 8,000 ES is guaranteed pretty much. Trump's going to run it hot. Rates are going to come down. More of the same, right? So everything's hunky-dory. What I wanted to highlight was tech, right? And here I think there's you have to be a little bit prudent. And remember that the year's just starting. As I've already mentioned, there's plenty of time to get in trouble this year. There's plenty of time to make money. There's plenty of opportunities to lose money this year. There's no point going, pedal to the metal early in the month. Usually January tends to be a little bit of a messy month, a tend of a sideways month. People tend to get pushed around, and then once full volume comes back, full liquidity comes back mid-January, then things start to trade a little bit better, and the year really kicks off in Feb. But there could be good Januaries, but overall, if you ask veteran traders, there's a lot of people who got into a lot of trouble in January before the year properly even started. So just be careful. So going back on tech, if you look at this chart, so basically we're looking at the traditional Fangman names. Our base case is that this topped a while ago, and you can see this pattern here. People will talk about a lot of different patterns, but essentially, once we ripped into these highs, but even these July, August, September highs, we never really managed to get any traction, and we've been stalling. All buy dips are getting bought, but still we're stalling, right? Distributing at highs is just not going anywhere, right? Despite all the hype, we're really not moving. And if you, instead of looking at the traditional Fangman, you actually you add Tesla and NVDA, you see even a clearer potential topping pattern, right? Now, does this mean it's the end? Absolutely not. And if you look at the structure here, you've got this previous high aligning with the 200 DMA, right? Actually, let's put it, you've got this kind of choppy zone. We're trading pretty much at the 50% of the zone. And so it would make sense that we could see a lot of aggressive trading this year, both to the upside and the downside. And unless we trade above or below this zone, you're still going to see choppy rotations, moves in and out of tech as everybody tries to reposition into other stuff too, without any major disruptions. Now, there's still be a lot of chance to get in trouble and a lot of chance to make money inside this range, but really it's still a non-directional move. Now, the thing I'd be saying is, because of this apparent topping pattern, right, I think the downside could catch a lot more people offside and could be quicker than the upside, okay? Because on the upside, you've got a lot of structural resistance and a lot of ugly patterns I wanted to go through just to highlight in case anybody hadn't noticed it. So here, NVIDIA, and maybe we need to wait for next earnings to have the oomph to try and go for those crazy double-digit overnight pumps to regain those highs. But you can see here, NVIDIA, it looks like it's trying to hold, but really it's stuck around this 183 level, and it's been stuck, as we said, we highlight that where we started that topping process in all these names, and it hasn't really gone anywhere, right? Even though the dips are getting bought below this zone, these failures at highs, whether you're looking at actual candle pattern or talking through the gap ups, gap down structures, are very ugly, right? Even the extremely ugly. So the point is, to the downside, it's probably far easier to fill poor structure to the downside and flush people that are offsides into the 200-day than to actually have to get through all these previous resistances, which are going to be fairly hard to crack, or you're probably going to need a substantial catalyst to do so. Google is holding up much better, but even here, it looks, once again, it looks like you had this this attempt to break higher. And especially as we go into jobs, it's going to be interesting to see how we close the week. Do we hold above this trend line break? And then your base case assumption has to be we're going back into those highs. Or if this ends up being a little bit of a false breakout of this trend line, then the path of least resistance is to retest these lows. And, should things get a little bit jiggy to the downside, look at all these gaps you've got all over the place, right? That's why I'm saying probably the velocity of move to the downside could probably be accelerate and be more scary than to the upside. If you look at Apple, this looks like very, very ugly, right? Again, another one of these topping patterns. No real bid, starting to fill these gaps. You've got another gap here, and this is another one like those initial charts where it looks like the market wants to come back into those 200-day moving averages. And again, unless we lose the 200-day moving averages, still a fairly bullish structure, but it looks like that's what the market is trying to do. And even here, if we start to rip, you've got a lot of overhead resistance to get through, right? It's not that easy. If you're looking at Amazon, I mean, you had that headline today, but here the structure was looking very, very ugly. Again, look at all these failures here on earnings, post earnings. It's going to take a substantial catalyst to really get through all this zone. So again, what I would be looking at here, this is another repeat extremely strong bull bear line, closes above, especially at the end of this week. It's likely going to try and regain all this upside structure, all this island reversal zone up here. But the move is probably going to be tricky. If post all the data this week, we close the week back below, then your base case assumption is we're coming right back to the middle of this range, back into that 200 DMA, but basically 2025 open. Microsoft is another one that's been looking horrible for a while. Now it is trying to base here at this key pivotal level. This is this high back from July 24. And here, nothing much to say, but really, as long as we're inside this zone, this is very choppy. If we can clear the upside and start closing above the 50-day and the 100-day, then clearly you'd expect it to try and come back into those highs. But once we get into the 530, you see these reversals here. This is going to be formidable resistance. It's going to likely take a huge catalyst to get out there. And clearly, if we break down below this 2024 level zone we highlighted, it's like some of those other charts. You've got a lot of poor structure to filter that downside. Either you're looking at the 200 DMA or you're looking at those April lows for a lot of these names. Facebook also stuck, but this is not looking too pretty. Still has to regain all those moving averages, but it's got a lot of work to do to the upside. Tesla, more bid than the other ones. I think here Tesla, don't make it harder than it should be. Continue to look at the Elon number, the psychological 420 here. Any pullback, as long as it can hold this ascending trend line, the 420 mark, this is still likely to try and test higher. But if it loses that, then your base case assumption is also that it's going to try and clear stops below this level and come back in the 200 DMA. Broadcom, this is another one which, despite all the pumps, all the earning rips, this is looking very ugly after the other recent earnings. So once again, we need to regain 375s, pretty much this level, or if not, this looks like it could be some complex topping formation too. Going back to Palantir, you got a little bit of a pop here on Maduro news, but again, a little bit more constructive than the other ones, but still a lot of upside resistance to get through. AMD, this is really not looking pretty. Clearly, this 214, 203 zone is really, really important, and it needs to hold this. But again, to the upside, a lot of structure to get through. And Netflix, which was the first that kicked off this ugly move in earnings, has made it back into our final target. I've been talking about this on Twitter too for ages, and now we'll have to see what gives. But clearly, this is very, very ugly. This could rally all the way back into, 106, 115, and it could still hold a bearish structure. So we'll have to see what gives here. But clearly, this is, this has more an easier room to pop than the other ones if indeed everything catches a bid very aggressively. So that's pretty much where we are on these. Just a short video. I wanted to talk through these charts because I've already posted them just to give you a little bit more color on them. Hope this was useful. And again, year hasn't really started. I'll try and do some more technical posts next week, or maybe some other kind of more long form posts. Okay, wishing everybody all the best. Again, wishing everybody health and wealth for 2026. Have an awesome one. All the best. Take care. Bye-bye, guys.